You're changing your view a bit on the small caps. I can only imagine it has everything to do with how Mike and I started this conversation, because the economy looks like it is slowing even further.
Well, I think small caps, what hasn't changed is small caps have been more adequately pricing in, the risk of a mild recession more than larger stocks have. But we did turn tactically cautious on small caps in mid-March, given, everything that happened with several of the regional banks. Small caps obviously have a lot more exposure to regional banks than large caps do. And a lot of the macro indicators that are most correlated with small versus large cap relative performance have, since been moving the wrong way. Tightening credit conditions, wider credit spreads. The ISM has continued to deteriorate, which is one of the more correlated macro indicators with small caps. So, I think near term it makes sense to be tactically cautious on small caps. But, I think a lot of the longer term positives for small caps are still there. So depending on your time horizon, I think a lot of the things like peak globalization and the fact that small caps are, very historically cheap versus large, still suggests upside for longer term investors.
You still prefer small caps over larger caps, though, even in the kind of environment that we are not only in now, but may progress into in the weeks, if not months ahead?
Well, I think near term, we want to see more signs of stabilization. The tightening credit backdrop that we're seeing, there could be more to go there. So I think that's a risk. I think if interest rates were to, continue to demonstrably rise, the fact that small caps have about 40% of their debt that's either short term or floating rate is another risk for the size segment. Obviously, some sectors have more risk than others. So I think, a lot of those indicators that we're looking at are suggestive of an environment where small caps could continue to underperform near term. I think, again, it really depends on your time horizon moving out. If a lot of this, stress in the markets, we see a more benign environment, and if our call is right that we have a very mild U.S. recession, I do think, the mild recession backdrop is something that small caps have been pricing in more adequately. And once the market bottoms, which usually tends to happen about 6 months before a recession ends, that recovery period tends to be the most positive phase for small versus large cap stocks. So I think near term we would stay cautious, but if you have a long enough time horizon, it's definitely, a compelling opportunity for small versus large. And I think focusing on particular areas within small caps as within the overall market is important. Being selective, being active rather than passive. It's actually been a good several years for active managers and particularly small cap managers. And I think the fact that, there's so many cross currents within the market right now, these environments tend to be ones where, selecting stocks tends to, work better than just buying an index.
Gotcha. Joe Carey Hall, thank you.